Good afternoon and welcome to this central bank analysis debrief. As it was central bank day both yesterday and today, we are going to go through one of those central banks being the Bank of England for Thursday, the 2nd of February. So let's get straight into it and let's have a little chat about what came out with the Bank of England today. So First foremost, let's just go over the statement, do a little bit of statement analysis, try and pick out what shifted, what changed, what was market moving in the statement from the Bank of England today. So as you can very early on see, the vote to keep QE as well as to keep rates at 25 basis point remained as it was in January at 9-0. So no one on the board was interested in voting for a hike today or a change in the QE program. However, there was a comment about some policy members are a little closer to their limits of tolerance of an inflation overshoot. So again, we've heard that the Bank of England is willing to accept an inflation overshoot, but they do have a tolerance level. And we actually heard now today that there were some members that were actually getting a lot closer to that level of tolerance. Now, it's no surprise there are two hawks on the board. They're wage growth hawks, so it's very likely this would have been Kristen Forbes as well as McCafferty. So that's pretty much the hawks sort of getting their sort of stance in the statement. In terms of obviously going forward, obviously the Bank of England said that monetary policy could still respond in either direction. So again, kept that guidance, that forward guidance in the market. They're reluctant to sort of lean the market towards hikes or cuts. So again, they kept that phrase there. And then the major changes in the statement actually came in the Bank of England's forecast of inflation on the 2-year horizon and the 3-year horizon. Now, if you cast your mind back into the November QR report, the Bank of England was talking about inflation being 2.7% 2 years from then, and today they came out and actually lowered that forecast to 2.56, as well as obviously their 3-year forecast for inflation came down to 2.36 from 2.5. Now, the reason this is key, or the reason the actual Carney sort of said the Bank of England made these forecasts, was because of the value of sterling, and he was explicitly stated that the stronger sterling since November had resulted in them revising down their inflation forecast. So again, he did make mention that they could adjust these forecasts just as easily if the sterling appreciates or depreciates. So it sounded like a very flexible Bank of England today. They can hike or cut rates at this current point, and a lot of it remains to be seen as to how things go forward with regard to Brexit and the negotiation. So just as a summary there, it's almost a case of if we start to see excessive appreciation in the sterling, that could cause lower inflation sort of numbers, and that would keep the Bank of England from doing anything hawkish. And conversely, if we saw much weaker sterling, that would affect inflation to the upside, and we could then likely see the Bank of England act in a more dovish manner. Okay, so that was pretty much the statement analysis from the Bank of England. Just let's look over at 2 or 3 charts. So as we can see on the daily sterling, the market took it as relatively dovish. Again, just to point out, there was quite a lot of short-term longs that were in the market that had played for that very important break this morning. So there were some very, very poorly positioned longs. So whilst the move looked excessive to the downside, a lot of it probably also had to do with some of the short-term positioning in the market. If we zoom in a little bit closer and look at a 5-minute chart of the sterling, we can see very quickly, once the market had digested it, within the first 5 minutes, we had dropped almost a good 100 pips, and more importantly, we then got some follow through over the rest of the session before the market started to settle into a tighter 30-40 pip range. So all in all, the market digested the Bank of England as somewhat more dovish, particularly on their inflation forecasts. Then if we go and let's go have a look at over some of the ladders, we'll notice that we'll be able to see some of the potential plays that we could have seen today. So what you're looking at in front of you is the the ladders from today. On the left, we've got the gilts. We've then got the German bunds in the middle and the pound sterling on the right. So what we're going to do is we're just going to play through this, go through a little bit of price action, particularly pay attention to the sterling and see what happened as the information came out. Remember, obviously, there was quite a lot of information that came out, but the key sort of takeaway was the inflation change. So we've pushed play. Let's see what happens now as this information comes out to the market. First and foremost, note how thin the market is. Very little in the market, very little price response. So we can see the data's come out now, and we can see that the market has gone quite aggressively bid, and we can then see all of a sudden the market has now gone off it and slowly starting to turn around. So again, we can see the market got up to 15s, came all the way back down to 86s, has now gone back bid. Let's see how it plays out once it gets back to these 86 area. Again, we can see the cable bounces off those 86s, goes back bid up the page, and we can see someone holding that cable market around the 86 level. So let's just keep an eye on this 86 level. Let's see how this plays out as we get through these 86s. So note, we bounced twice off these 86s. The market real reluctant. Probably a little bit of digestion of the information still. And note, once we took the 86s, a little bit of stops, and more importantly, some follow through. So we can see the market's taken the 6s and we've followed through all the way down towards the 86s, and the market continues to move lower. So again, note the market's now coming back bid. If we were just keep an eye on these 86s, remember obviously 86 is our key level, and we can now see the cable starting to slowly but surely continue filtering down the page. So had a very key little area around those 86s, acted as a good little support before it now turned into resistance. So if we fast forward this, we can see the market continues to leak, continues to sell off, continued sell side action. Why? Because, well, we saw a little bit more of a dovish Bank of England, a little bit dovish on the 2-year and 3-year horizon for inflation. So we sold all the way off from the 86s all the way down to the new lows at 40s, and as per that chart, we can see the market continued lower and lower throughout the session. That's pretty much our ladder replay series. What you will note if we go back to that is notice how a lot of the time the reason we watch these ladders so often is that a lot of the time when you watch them back, you actually realize that you do have a lot more time to respond than you think. So let's just go back through this and start this off again and see how much time we actually had to respond before the number. So let's just get this back to the starting point, and we can see what we can do here. Okay, sorry guys, just trying to find this point. Okay, yeah, we are ready to go again. Let's see how much time we have now. So the information's come out in the market, and we've gone at 10 seconds or 10 minutes 15 seconds. So note now, we're going to get a good 30-40 seconds to digest the information, read the information, and then more importantly, act on the information. So we can see the market's come down to those 86s first time. Now note, it's already been 20 seconds since the information's been released, and the market goes back bid, and again comes down to those 86s, and again this is now almost 30 seconds into the release. So we can see the market's gone bid off those 86s again for a third time. So if we see the time it takes the market to digest the information and ultimately break down below those 86s where the real opportunity exists. A lot of all this that you're seeing here is a lot of noise, alright? The real meat comes when someone with influence has had time to digest the information and act accordingly. So there it goes. As we can see, at 11 minutes and 10 seconds, almost a good minute later, we can see we break down below those 86s, and a good sort of 3-4 minutes later, the market is all the way at the low of the day.